When you look at the U.S. China trade war, do you have any insight on how this could end? Is it going to go to a phase one deal, and what comes after that if we do get a phase one?
Well, first of all, I think we're having a trade skirmish. I think the two sides have some disagreements on trade. But if you look at what's going on, the two countries are functioning. There's a lot of trade still going back and forth. The United States is receiving the goods from China that we need to have a fully functioning economy, and our economy is functioning well. I hope that we get a phase one deal done, and I think it's in everyone's best interest to get a phase one deal done.
Okay, but supply chains have moved, have they not? From China, they're going elsewhere.
That's a natural business cycle, and I think that makes sense. That supply chains have moved. Maybe companies got too concentrated in one market, and maybe we're seeing more global diversification of supply chains, which in the end probably is a good thing for companies to be more diversified about where they get their products and where they get their supply of goods.
Okay, but if you have this skirmish staying and lasting for 5 years, 10 years, that must hurt the world economy.
No one wins. I'm not saying this is a good thing. Don't interpret this as a good thing. What I'm trying to say is everyone talks about how dramatic this whole trade confrontation is. It's having impact. But whenever you have impact and countries are disagreeing in some fashion, markets make up their own mind what they need to do. Markets have very quickly made up their mind, and companies have made up their mind. Look, we need to diversify our supply chain. We cannot be as dominant and dependent on one country or one supplier as we were in the past. And we've got to create more diversity in the system, which net-net is a good thing for the system. Yes, it's having some economic consequences, but it's not the only thing going on in the economy.
Okay, you've worked for President Trump. How does he view China? Is this a supremacy 10-year trade confrontation, or is this actually he wants a deal and he wants it fast if the Chinese play by the book he wants?
I think Donald Trump's more interested in getting it right in the long term. That said, and this is an important that said, he understands how important it is to get the farmers back to work in the United States. We have a big agricultural economy in the center of the United States. Our farmers need to be exporting farm products. And our farmers have gone through a very tough cycle here, losing export share to China. Our farmers need to get that back, and they need to get that back by next summer. So getting a phase one deal done would allow farmers to get back into the growing cycle, would allow farmers to become a major exporter back to China. The Chinese need to import food. So the question is, who are they going to import it from? And I think importing it from the United States is very important. So I think the president understands that as a short-term phase one fix, getting our farmers back into the cycle of selling to China is important for the short term.
Okay, but phase one is what? Status quo.
Phase one is much more increased farm exports from where we are now, back to where we were before, and even back to a higher level. In the end, President Trump cares about protecting U.S. intellectual property. He cares about protecting copyrights. He cares about market access for U.S. companies, which makes a lot of sense. You think of the United States as 350 million consumers, China 1.4 billion consumers. Wouldn't you want to, as President of the United States, open up a market to 1.4 billion consumers? If you're a U.S. company, of course you want to open up that market to the U.S. companies. So he's trying to make sure that we have a level playing field where U.S. companies can access the Chinese market, just as the Chinese have accessed the U.S. market.
But chief executives around the world, given they have little visibility, are not investing in their markets. And it could be a French chief executive, it could be a chief executive in Ohio, it could be a chief executive in Germany. That must be a negative.
So I think there's a bunch of negatives going on the investment cycle. And I'll be the first to tell you that when you're looking at CapEx and you're looking at investment in the U.S., when you look at CapEx, the first thing you're going to look at is building factories, building buildings. You're going to buy steel, you're going to buy aluminum. They were the first two things tariffed. I thought that was not the right decision. I would have never tariffed input products. It's different to tariff final goods and services than it is to tariff input products that go into something that you're going to build that creates jobs. So the cost of steel and aluminum going up in the United States takes away the competitive advantage that we gave them in lowering corporate taxes. But remember, we lowered corporate taxes to compete with the rest of the world. We lowered them to their rates, but then we made the cost of steel and aluminum higher, so it then disincentivize people from opening plants in the United States. Then layer on top of that the geopolitical situation we have in the United States right now, And it's a very tough environment to take a decision to do a major capital expenditure in the United States, because you don't know what the political environment's going to look like in the United States. We've got a lot of candidates going after corporations, corporate earnings. What's the cost of healthcare going to be? What's it going to cost you to run your business in the United States? You're better off as a corporation today to wait for some more clarity before you make a big capital investment.
So what, November 9th, 2020, money from chief executive is going to come back into CapEx?
I don't know for sure what date it is or when it is. Clearly, if you need to invest in capital right now to grow your business, you're doing that. Companies are spending money in capital. But if you're going to build a big, what we would call bricks and mortar or steel and aluminum and copper facility, and you're going to hire a lot of people to do that, you probably will wait till you get some clarity to what is it going to cost you as terms of labor and what it's going to cost you to run that facility vis-a-vis opening that facility in Mexico or Canada or Asia.
So what does the Federal Reserve do in all of this? They're kind of getting attacked by the president. They have an economy that seems to be holding up, but I guess it could turn.
Look, the Federal Reserve is an independent agency in the United States, and I think protecting the independence of the Federal Reserve is of utmost importance. I think that Jerome Powell and the other governors and vice chairman of the Fed have done a very good job of trying to walk the line of independence. They are making their policy decisions based on the data that they are seeing. They are always trying to figure out what is going to go on in the economy in the future, which is a very difficult thing, especially when you're a globalized world today. And I think Jerome Powell and the other voting members have been making the right decisions based on the data they have at their fingertips at the time they make the decisions.
But is the Fed now central banker to the world and not just to the Americas?
Look, the Fed is the central banker to the dollar. And the dollar is a key trade currency in the world. Global commodities are denominated in dollars. A lot of trade happens in dollars. So in essence, what the Fed does have an impact on the rest of the world.
Okay, where do you see dollar from here? Is that far behind your Goldman Sachs?
No,
you still look at it, right?
I still look at it. Of course, I still look at markets every day. Look, I think the dollar is going to continue to remain on the relatively strong side. Yeah. You know, people talk about low interest rates in the United States, but relative to the rest of the world, we've got high interest rates, and people continue to migrate to a higher interest rate currency, and the dollar is a high-yielding currency today.
Okay, I know we're going to take a break and talk about crypto and the things we're focusing on.
Okay.
Are we going to see Gary Cohn, chief executive of a big financial institution, 2020, or anytime soon?
I don't think so.
Why not?
I'm just not sure that's Gary Cohn's next job.
Okay, what are you doing at the moment?
So right now, besides speaking and writing and teaching, which occupies a little bit of my time, I'm spending an enormous amount of time in the venture capital and private equity world in two areas, in medical technology and really in the secure communication, secure data space. The secure communication, secure data space does take you to the payment space, because if you can secure communication, you can actually end up in the payment space, and that's a really interesting space to be in right now.